Good afternoon and welcome to your weekly FX options report. Today is Wednesday, August 31st, 2011. In midweek trade, the major U.S. stock averages are trading in positive territory. The Dow, Nasdaq, and S&P 500 rallied at the open, and although they have pared their earlier session gains, they are still higher by at least half a percentage point. Now, U.S. Jobs data released on Wednesday came in on a mixed note. The ADP employment report showed that the private sector in the U.S. added 91,000 jobs during the month of August, which was slightly lower than the 100,000 expected. Over half of the gains seen in the private sector did come from small businesses. Meanwhile, the Challenger Gray and Christmas jobs cut report showed a decline in planned layoffs during the month of August, down by 21%. And next week, President Obama will be announcing his jobs plan. Now, he did say that the White House does have a range of policy options to create up to 1 million jobs in the U.S. And moving on to the spot FX market, the U.S. dollar is seeing mixed trading in midweek trade. One way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And in our next section, which is your daily trend opinion, we'll take a look at the individual IC FX option pairs, starting out with the AUX, the US dollar against the Australian currency. Now, for that pair, a technical rebound is in the bearish trend, and that pair has broken above the bearish trend line. Therefore, the preference of trading central analysts is long positions above 92.50, with targets coming in at 99.40 and 102 in extension. For the BPX, the dollar against the U.S. currency, that pair is under pressure. The BPX has struck against its resistance, and the preference of trading central analysts is short positions below 63, with targets coming in at 59.75 and 58.70 in extension. Moving on to the CDD, the dollar against the CAD. A technical rebound is currently in a bearish trend. The RSI has broken above its declining trend line, and it is approaching its next resistance. Therefore, the preference of trading central analysts for the CDD is long positions above 95.75, with targets coming in at 101.50 and 103.50 in extension. And moving on to the EUI, the dollar against the euro, the downside does prevail. Now, the pair does remain under pressure, and it is approaching its support. The preference of trading central analysts is for the EUI is short positions below 72, with targets coming in at 68 and 67 in extension. And moving on to the SFC, the US dollar against the Swiss franc, caution is advised. Now, for that pair, it is pulling back on its medium-term declining trend line. The RSI is capped by a declining trend line. Therefore, the preference of trading central analysts is short positions below 80, with targets coming in at 75 and 71 in extension. Last but not least for this segment, let's take a quick look at the YUK, the dollar against the yen. That pair is under pressure, and it is also challenging its support. The preference of trading central analysts is short positions below 79.80, with targets coming in at 76 and 75 in extension. Now, moving on to your weekly trend opinion, the US dollar remained under pressure mostly against its exotic counterparts. And in regards to the majors, it is facing, the US currency is facing a wide trading range. Now, we do have one trade alert for you right now, and it is to consider calls on the AUM. Now, that pair is posting a rebound on its medium-term rising trend line and should reach its previous high. Trading central analysts are also keeping a close eye on the EUI, the BPX, the SFC, and YUK this week. And looking ahead to next week, trading central analysts will be looking at the SKA, the PCO, and the NZD. And that does wrap it up for today's weekly FX options report. Thanks for watching, and have a great day.